Good evening. This is the Elliott wave update for the S&P 500 for Sunday, July 10th, 2022. As the markets reopen here in the Globex session, they are a little bit lower, but bouncing around still in the red, but not very much. And I don't expect that to really last too much longer, to be honest. So let's kind of jump in. I've made, let me start. As I have discussed many times before, I run parallel counts in parallel with each other because they both have a strong potential of being the count that actually does kind of come through. We just went through a situation where this could have been a small 4 or it could have been a wave 2. It's turning out to be a minor 4. And not the small 4 that I was thinking it was before. What we're dealing with, or the minor 2, it's turning into a minor 4. So the situation goes back to the other count, which labeled here the 3639 low as the end of minor wave 3. And previously that was minor wave 1. And that there was adjustments made within this third wave that could have brought it up and put a higher degree. So this then being a minor 2, expectations for that would have been that it could rise up to 42.5, 4,300 as a minor wave 2 and then drop. And the inability for the market to really get itself up to levels that are more associated with a second wave. It continues to fit more cleanly within it's still an ABC, but it's a smaller fourth wave. So it should still get up above 4,000, but not into these upper reaches, which is what I would expect from a second wave versus a fourth wave. So what changes is not the direction, because both would still be pointing up, but one's going to finish and then drop. So really what changes is the change over into that next level of it dropping. And then once it does begin, the intensity will still be there, but the level that it reaches is going to be very different if it is only a minor fifth wave versus a minor third wave. So that's where the real differences come in. Now, back to the count, this being minor 3, we'd be looking at a minor 4, and it fits right now. So it's the other side of the parallel count that I have. Last week I was showing that. Now I'm showing the other side. Both still have a fairly strong potential that we have one more little leg down to do, or one more leg down to do before this next stronger, more tradable bottom will be put in. If this is a minor third wave coming off, again, the other count, we're going to be on hold a lot longer, and that the S&P would be considered to go a lot deeper in this next downswing versus the minor fifth wave basically calling for a drop down into the closer to 32.25. So definitely seeing a break below 37, 36, 35, all the way down into here would not be out of the ordinary for a minor fifth wave coming down. Ultimately, though, it's going to depend on what that looks like coming off of 36.39. That I would for certain expect to break once this once this C wave is complete and we can drop into that fifth wave. The fifth wave would be expected to break the low of the third, and that's at 36.39. I will be able to then run from here to including the third up to the top of the fourth, and that'll give us more Fibonacci extensions for the completion of that fifth wave. I believe that right now, even estimating here, and I can do that actually. Let me go from here. So these are just estimates, and it's going to overlap real quick. But I'm just going to go up, and let's say it gets to 4,048. So you can see 618 is 3514. Wave C or wave 5 would be 0.618 of wave 3 at 35.14. That's not uncommon. Further on down the line, we have 100%, which is also on the availability list, will come in at 31.82. So that then drops us down closer to that 382 level. But we have 35.14, 34.38, 33.68, and then down here. And it could be a fairly strong fifth wave and not be out of bounds in terms of that third showing up as the shortest. It would not. Wave 1 would be, it would be equal to wave 3 or a little bit less. Both are acceptable. So it has the potential, and we would monitor it if it starts to come in. Right now, for tomorrow, I would be expecting the market to, before this all begins, and now I've really got to probably take off that one. Yep. We're looking at this upside move to pick up and continue, and that suggests that, number one, it's got to get itself back above 3,900, and that zone is up to 39.22, but actually it's 3,900 to 39.30, because that once it clears all of this, then it's got 39.30, 31 right behind it, then 39.58, 39.82, and then that 4,000. I do believe that the market, for whatever reason, wants to see 4,000. Now we have the monthly July expiration coming this Friday, the 18th. And so I'm feeling that we're also walking into the earnings reports. So there'll be a lot of positioning as to what people want to be long or short, I think, coming into this expiration. And so it could be very interesting. We could be ending up, or we could maybe do a Monday, Tuesday, Wednesday up. On Wednesday, before the Monday, Tuesday up, I should say. On Wednesday, we have CPI. On Thursday, we have jobless numbers and PPI. And then on Friday, we have something else. And I think I may have just done that backwards. So let me just double check. On Thursday, we have jobless claims, PPI, right. And then on Friday, we have retail sales. So it's inflation, inflation, inflation. And it could be inflationary depending on how many people suddenly find jobs. So we have a lot of coming out that's going to give us a little bit cleaner hint on inflation, and it might just drive the market down. So 2 days up, 3 days down, get this all done. But because at the end of this, going back out to that daily, looking for this up move to finish and to have a pretty quick slide down in a minor fifth wave, could take more than a day, could take more than the week to finish up, but I wouldn't expect it to lag around. Now, and once that's in, then we're going to come down, we're going to finish this C wave. And then we're going to label that primary wave A. What we'll be looking for is the start. So again, when we get down to these levels, I'm looking for a very tradable bottom over, and it would be near to, I hate to go mid, but at least near term bottom. And I would be expecting a B wave, a primary B wave. We've already done intermediate A, B, C. So that's all done. Now we're going to move into the primary degree B wave. So we'll be able to measure from the all-time high down to wherever this market bottoms. And that will give us our retracement levels for what we'll be looking for in a B wave. It will be very tradable across several fronts. So let's get through tomorrow. Let's get through the balance of the decline before we all rush into time to buy, time to buy. It's not quite there yet. I will finish up there tomorrow, looking for the finishing up moves for the C wave, and we'll see how far we can get with the ultimate beginning of the next minor fifth wave down. Next update will be on Monday, July 11th.